Hi everyone, good afternoon, and welcome to this Hoperation Fund meeting. Today I'm gonna be reviewing the investment section of the Hoperation Fund. Mm. The return of the fund in July was negative 2.5%, and the total value of the Hoperation Fund investment portfolio is now about 14,120-ish. In July, I liquidated the positions MAGS, LVMUI, and MA. I sold the stock LVMUI, which belongs to the Louis Vuitton company and its other subsidiaries, because 1/3 of the company's profits come from China. And since China's economy has been getting weaker and getting worse, less people are willing to buy the company's products. Therefore, the company's business is slowly getting worse, and there is some uncertainty about the company. I sold the other two positions, MAGS and MA, mainly to raise capital or cash for the new positions and for hedging. Speaking of new positions, I opened the new position PHM with 1.5% capital, as well as WES with 2% capital. I will review my reasons for buying WES and more details later on. Mm, So here's a comparison of the monthly returns of the Hoperation Fund, SPY, and QQ. Um, Note that the total return since the fund's launch is now about 59.5%. And the year-to-date of the fund is 29 with about 30%, which is 2 times more than SPY and QQQ's year-to-dates. And here in this chart, you can see I plotted the growth of the Hoperation Fund SPY and QQ. So moving on, let's talk about one of the new positions for the Hoperation Fund, WES. WES, or Western Midstream Partners, is an oil and gas midstream company with about 9% distribution yield. In the oil and gas industry, there are mainly three types of companies: upstream, midstream, and downstream. For upstream companies, they are mainly in charge of oil and gas production and exploration. They will do field development, production operations, etc., and exploration, and they are mainly in charge of producing the crude or raw oil. Midstream companies um, store and transport the crude or raw oil from the upstream companies to the downstream companies through pipelines. And in the downstream companies, they will refine and purify the oil and gas and distribute it through sales, marketing, and retail. Mm. In the oil and gas industry, midstream companies are crucial because they connect producers of oil and gas, the upstream companies, to consumers who turn these commodities or resources into valuable products, the downstream companies. Um, Among other benefits, midstream companies' income has less impact by oil and gas fluctuations compared to upstream and downstream companies. This is because while upstream and downstream companies depend on the prices of oil and gas to make their profits, midstream companies get their profits by charging fees for other companies to use their pipelines. Therefore, their business is slightly more stable and doesn't depend as much on price fluctuations. Also, after many years of investments in their pipeline network, most midstream companies now have positive free cash flow, strong balance sheets, and most importantly, a wide moat, which is critical or essential for every company. So, talking more specifically about WES, um, WES or Western Midstream Partners is an excellent company among other midstream companies. It owns 21 gathering systems, 69 processing and treating facilities, 7 natural gas pipelines, and 12 crude oil pipelines. It's also exposed to the highest oil producing field in the US, which allows it to benefit from ongoing oil production growth and subsequently a rapid rise in gas production. Mm. Western Midstream Partners also actively divests non-core assets, reduces debt, repurchases units, and grows distributions while maintaining modest or slightly minimal spending and expenses and generating free cash flow after distributions. So now let's talk more specifically about WES. Um, The WES also has a sustainable competitive advantage. Um, its assets, such as pipelines, naturally have wide moats. This is because building new pipelines aren't easy for other newer companies due to government regularizations and environment considerations, as you need a permit and you need to sign all sorts of fancy contracts in order to build pipelines on a piece of land. There are also almost no alternatives to the existing pipelines owned by Western Midstream, um, which is advantageous to the company as um, if upstream companies have less alternatives, WES can gain more profits. There are also some main risks of this company. Number one, their dependency on the company Occidental Petroleum might cause some problems in the future, as it's not very good to be mainly dependent on one company. WES also has some debt. Debt, when looking at oil and gas companies, debt is particularly important. Um, Market volatility. Um, while I said before that mainstream companies usually aren't as affected that much by oil and gas prices, um, they will be affected by to some degree by market volatility, like if the demand or production of oil and gas goes up or down significantly. As you can see from this chart here, this chart shows the drawdowns of WES um, in percentages. So you can see in around 2020-ish, WES had a drawdown of around 90%. So you can see um, this this company can still have a lot of volatility. There are also regulatory and environmental risks, such as if the government suddenly retracts or draws back a permit they gave WES previously to build pipelines on a certain piece of land. So there's those sorts of regulatory risks, etc. Moving on to talk about the financial strength of WES. Um, it has an interest coverage of 4.05. This is not very good as usually mm, usually um a good interest coverage should be at least 15. However, WES is an oil and gas company, and usually those companies have to take on more debt. Um, so four so 4.05, while it's not a very good interest coverage, it's still tolerable. It isn't bad. The net debt over free cash flow for WES is also 6.54. So again, this is pretty high, and this is not very good. But since oil and gas companies or companies in its industry, again take on a lot more debt than regular companies, this is still an okay, still tolerable. Its goodwill over assets is 0.04%. So this is pretty good, pretty low. Its debt over equity ratio is 2.09. As I said before, um, oil and gas companies generally take on a lot more debt, especially midstream companies, as they take on more debt to expand and build new pipelines. Um, to gain more profits and income. So a debt over equity ratio of 2.09, while not good in normal companies, in this industry it's is still an okay debt over equity ratio. The current ratio for WES is 1.68. This is actually a great current ratio, as generally a current ratio of above 1.5 is a pretty good, great current ratio. Its quick ratio is also at 1.64, so still pretty good. The capital operation of WES, um, or the CAPEX over sales is 24%, and the CAPEX over operating cash flow is 42%. So this is again a not very good um ratios, as these are pretty high, 24% and 42%, very high. Generally, the lower the CAPX over sales or CAPX over operating cash flow, the better. Mm, For the capital allocation of WES or Western Midstream Partners, its ROIC and ROE are 12.7% and 42% respectively. Um, Generally, an ROIC or ROE of above 25 to 30% is great. Its ROE is 42%, so that's a pretty good ROE. Its ROIC is 12.7%. So this is not a very good ROIC either, but in WES's or Western Midstream Partners industry, this counts as an this still counts as a good or okay ROIC. Moving on to the profitability of Western Midstream Partners, its gross margin is 71.1%. So this is a great gross margin. Um, Usually a gross margin of above 60% counts as pretty great. Its net profit margin is 43.2%. This is also really good. Its OCF over net income is 128.2%. So OCF over net income or operating cash flow over net income generally should be above 100%, as the OCF should be higher than the net income. In WES's case, this is 128.2%, so this is a pretty good. Mm, The stock-based compensation of Western Midstream Partners is around 2.7%, 1.1% for SBC over net income and SBC over revenue. So generally, the lower the SBC over net income or SBC over revenue, the better. So this is pretty low, I guess. The growth of WES is pretty strong, as you can see here. Its revenue growth in the past 3 years is 8%, so still steadily growing. Its EPS or earnings per share growth in the past 3 years is 21.5%. Great. Its expected revenue growth in the next 2 years is 10.2%. Good. Its expected EPS growth over the next 2 years is 18.5%. So you can see pretty good. Its PG is 0.15. So this is actually a really surprisingly low PG, which is generally a PG of less than 1 should be pretty good. Is a 0.15, so this is actually a great PG. Mm. Mm. Looking at the dividends and yields of Western Midstream Partners, the distribution yield or dividend yield of WES is 9%. So this is pretty high. Its payout ratio is 90.5%. This is actually a really high payout ratio. Um, and it might be a little bit unsustainable, but again, this is a pretty high, pretty good payout ratio. Its shareholder yield is 10.1%, great. Its earnings yield is 10%. Its free cash flow yield is 7.4%. Um, and finally, the valuation ratios of WES are still pretty low. Its P ratio is 10.1. This is a great P ratio. Its PB ratio is 4.5. Its EV over free cash flow ratio is 10.9. Generally, EV over free cash flow ratio of under 10 to 15 counts as a great EV over free cash flow, in my opinion. And its EV over EBIT is 14.7, so still pretty good. So generally, as we have seen here, um, its basic fundamentals are still great. And finally, um, using a website, I calculated the valuation using the 5-year DCF method of WES. As you can see from this screenshot, um, the expected valuation of WES is anywhere from $41 to $58. And considering the fact that I bought this stock at $40.92, as you can see from this chart here, either way, according to this valuation, which I have found previously to be pretty to be pretty to be a pretty good valuation. Um, so so looking at this valuation, I can earn money either way. Okay, so overall, That's it for today. Um, as you can see here, I listed all my reasons for buying WES. Um, and thank you all for taking the time to watch this video. If you like this video, please don't hesitate to like and subscribe. And thank you again for taking the time to watch this video. And bye.